Hello and welcome to your update on the S&P 500 SPX. In this video, I want to take a look at the weekly chart and then work my way down into the daily time frame for the S&P 500. Want to start with my thought process around basically the SPX chart, and then we'll switch to the daily chart as well. But it can make sense from time to time to take a look at the bigger picture, first of all, for context, and also to just help everybody understand what's going on here. So this is my preferred wave structure. On this chart, I'm tracking an extended fifth wave to the upside from the 2020 low. It just aligns best with my Fibonacci guidelines. There is another way, which doesn't really make a great difference. There is another way of counting this. I could place the third wave here and the larger fourth wave here. For most people, that would look more harmonious, I guess. But there are various reasons why I label it like this. If we use standard Fibonacci guidelines, this wave structure makes most sense, at least based on the model I use. But again, it doesn't really make a great difference. In this scenario, though, it is, the only point is this fifth wave is getting quite extended. We're going to dive into this fifth wave on the smaller time frame in a minute. But yeah, overall here, the idea is that a major fifth wave is currently unfolding, which could basically tap a top at any point at any time, because we're getting close to the end of a major bull market. But at the same time, please note this is a probabilistic model, so it's not an absolute prediction, and therefore we just cannot confirm a top until the market gives us signals for it, for example. This basically tells us, however, that this move up from the 2009 low is already a five-wave move, whether I call it, whether I count it like this or place the larger degree fourth wave here. It would not make a difference. This is already a five-wave move, and we're likely in a fifth wave extension either way. Now, if we then take a look here at the price action from the 2022 low, I mean, my view is that we're dealing here with a five-wave move to the upside from that low, and it likely is an ending diagonal pattern. So what we can do is shift here maybe the wave degrees higher a little bit, just change the wave degrees, so I've got more subwave structures I can add here. And then the idea is from the 2022 low, I've got here a wave 1, a wave 2, a wave 3, a wave 4, and this here is likely a fifth wave to the upside that's unfolding. Labeled circle 1 to circle 5, that's currently the idea. It would likely be a diagonal pattern, best I can tell, which is why on the smaller time frames and also on the ES futures charts, if you follow these analysis as well from me, then you will note that I'm tracking this move to the upside from the April low 2025 as basically an A, B, C structure. So from that point of view, just to put the micro counts on here, the idea is that this here was an A wave, had a B wave pullback, and a C wave in circle wave 1. And then obviously also the third wave here the third wave would be an ABC structure. So also here I can track wave A to the upside, likely topped in March 2024, had a B wave pullback, and a C wave to the upside. And this was the third wave, which topped in February 2025. A lot of people called already for a bear market after this. I think it was around about 20% drop. Now, it was still only a three-wave move down. You might remember that from back then. And therefore, the fifth wave to the upside should also be an ABC structure, obviously. But there are various ways how this move to the upside can be counted, can be interpreted. And we're going to switch to the daily chart in a minute. But please note that we are likely in a fifth wave of a fifth wave of a fifth wave. So we're approaching the late stages of this larger degree third wave, which means any break, below critical support levels could likely indicate that a major price top has formed, which would then indicate that this larger degree fourth wave could be unfolding, which, not necessarily takes us down that far, but it could be really a long bear market that might be unfolding. There are other ways. I mean, again, in the end, this is a five-wave move up, so there might be a perspective where we can call all of this another wave 1 and then a larger wave 2 pullback, but even this would be substantial, right? If this entire move gets corrected. The main question is, does this move get corrected from the 2009 low, yeah? Or does a much, much larger, maybe even century, nearly 100 year long, nearly 100 year long lasting impulse get corrected, which would be this major fourth wave correction. I think something that we hopefully, well, we will probably see it, but hopefully, yeah, you know, again, hopefully it won't be like that, because it would have strong impact on society and so on. Yeah. So this is the SPX weekly chart. Now let's also take a look at the daily chart. I'm gonna save that. The SPX daily chart, we might need to tidy it up a little bit. Let's see, but it is based on the same assumption. So you'll see here that in this fifth wave from the so in the fifth wave from the April low, I'm tracking an ABC structure. There are a couple of ways really how this can be interpreted. One way is to call this move up an A wave, then the B wave, and we're now in this C wave, and it could take a fairly direct route higher here. Yeah. In this case, we are likely in this fourth wave, or potentially could start this micro price action at the moment on many of these indices. Really difficult to read, so don't interpret too much into the micro price action. The nearest support area here for this fourth wave on the daily chart, it's this one. Hold on, not this one. By the way, I'm labeling this C wave to the upside as an impulse in the white scenario. Yeah. So again, it's an ABC structure, but the C wave would be an impulse. So we're typically tracking support around the 23.6 retracement all the way down to the 50% retracement. So this is the support area that should hold. It's very much possible. Hold on. It's very much possible. Let me see if we say, yeah, I think it might even count best with the latest price action that we've seen like this. And we might be in this fourth wave now. And then could get one more high. That means, do I need to just support just slightly maybe? Because we also reacted here to the 23.6 retracement. So it could very well be this white wave 4 is now unfolding, and then a fifth wave to the upside could still send us higher once more. In other words, I'm not convinced that a major top has formed just yet. Now we can also say that obviously, in the white scenario here, I've got this as an ABC, but the orange pathway allows for a more extended ABC structure. That means if we break upper support, the focus will shift to lower support here, which would also, you could consider that a mini crash, depending on how deep we go, but that involves potentially 10 to 15%. To be fair, if this is a B wave, it would actually be quite bullish overall. It would likely reset a lot of the indicators. I would find that quite probable, this potential correction. Let me shift that to the right. The reason is we've arrived at an important larger degree Fibonacci extension level around $6,500. If I track this as an A wave down, B wave up, C wave down, this tells us how this B wave in orange could play out. Basically, to really confirm a major bear market might be unfolding, we would need a break below $5,140 at this point. Yeah, based on the data I see right now. So, in other words, actually, the orange scenario would be more bullish. Okay. Now, only if we hold this support area, of course, which is going to be a big if, because the price has already pushed to a new high. What would have been great, it would have been great to get this B wave from a lower high, right? Not from a higher high, because if it starts from a higher high, the question is always, well, is this all of it? Is this going to be the major top? Because it is already an ABC structure to the upside. Do you see that? So this technically already fulfills the idea of all 5 waves to the upside, and the 5th wave started in April. Just on the nano level, one more high would be ideal in the white scenario. But obviously, I cannot rule out that this is turning into a broader ABC structure. This would have to be ruled out before we confirm a major bear market, for example, right? But I can tell you that below the upper support area, probabilities for a larger bear market increase. But I will first watch this support zone, which I've been tracking actually since, I don't know, May. But it's never been reached. You see that here, this move up from the April low, unusually shallow pullbacks only, right? Compared to what we have normally. Yeah. Very, very shallow pullbacks only. Now, September is normally a weaker month, and then typically year end is strong. We'll see what happens this year. Could very well be that we consolidate below this key level for quite some time before pushing higher for a year end rally. Or maybe in September, which is historically a weak month, a pullback unfolds, which could then lead to a year end rally afterwards. But this gives you a good idea of the context, SPX Weekly and SPX Daily. Hope you enjoyed it. Thanks so much. Bye-bye.